Hi everyone and welcome to my morning report analysis videos on Tuesday the 4th of April with me, Richard Perry, market analyst at Handset Markets. We've got a fairly negative outlook on trading markets just beginning to develop. Risk aversion is coming through. We've got this meeting between Xi Jinping and President Trump at the end of the week in the US, and they're sort of meeting to discuss, President Trump is obviously trying to generate the discussion around trade, U.S. trade deficit, and also possibly even the new the North Korean argument that could well be a big driver of protectionism and also increasing international sort of tensions. So subsequently, we're seeing safe haven plays benefiting. What we have got in the markets is the move lower on Treasury yields. Now, this is a key move potentially. 2.3% has been a massive low on the Treasury yields for months now, and that is once again coming under pressure. And that is sort of reflective of this sort of move into safe havens. You've got gold up, you've got yen up, you've got the dollar, which is just holding on at the moment, but that's coming as other forex majors such as sterling is under pressure. You've got the Aussie under pressure. The Aussie is under pressure also on the back of the RBA meeting overnight. They kept rates on hold at 1.5%, but they were also a little bit cautious when it comes to the labour market and also inflation. So the market has taken that as Aussie negative. But certainly, if you look at equities, we're starting to see the VIX volatility pushing higher. You're seeing a little bit of caution coming into equity markets. On my chart today is the DAX. I can show you a little bit of corrective move potentially coming through on the DAX. And yes, it is very interesting that we're seeing all this coming at the moment. Now, in terms of our our data today, you've got the US trade balance at 130. Now that is interesting because, as I said, we've got this meeting between Xi Jinping and President Trump at the end of the week, and as I said, US trade deficit is likely to feature in that meeting, and that trade deficit is expected to come slightly down to 44.8 billion. Sorry, that's the wrong one. US trade deficit at 44.8, so but still a pretty strong deficit there, you would say, and it looks like that will be a focus in the meeting. You've also got this afternoon the the factory orders for the States. Now that's expected to be another positive month, actually 1% higher on the month. Now that continues the recovery actually in the year-on-year stats, so that could well be dollar supportive again this afternoon if that beats expectations. But certainly the factory orders are beginning to be a bit more supportive and reflect a decent recovery in the manufacturing sector in the States. Now my chart of the day is the DAX, and what we have got on the DAX is a bearish candle that we saw yesterday, basically where you opened higher on the day, strongly higher, about 60 ticks higher, but then closed about 60 ticks lower. So a big turnaround, opening at around the high of the day, closing at around the low of the day. That never really looks all that great in terms of the outlook when you're sort of buying or that you've got a strong market outlook, and it sort of comes where the market's tried to sort of push above this old trading range, this sort of trend channel high, but closing back inside it. Now I'd take that as a sort of a negative signal, especially coming with the RSI, which hit around about that 70 point again. High 60s tends to have sort of been limiting in the DAX in recent months. And subsequently, when you do see that rolling over, you see a bit of a corrective move. We've seen that a couple of times, February and March, and now could that be happening again? So we could see a bit of a corrective move. You've got the breakout levels. 12,156 is this breakout support, and then 12,82 was the early March high. So between 12,82 and 12,156, what's that? About 80 ticks. 70, 80 ticks. I think that we could see a move back into that area, I think, in the coming days perhaps, with the stochastics giving you a bear cross as well. That has also tended to be a feature of these little corrective moves that we've seen through late Feb, early March, mid-March. So having had that bear cross on the stochastics, not confirmed yet as a sell signal, but still I think we could see a bit of a corrective move coming through the DAX. Now you see the hourly chart where we sort of are now holding on to a basis of support, 12,180 up to sort of a trading range really, 12,180 towards 1260 area, sorry 12,260. Bit of a basis of support, but I think that if you sort of break below that as the market has corrected away, stochastics and MACD lines on the hourly, a little bit corrective near term certainly, and I think little corrections could be starting to come through. So this sort of rolling over the bear candles that we've seen yesterday and into today. A little bit of a consolidation today, about basically flat on the day, but I just think that the bear counters are sort of mounting now, and I think another lower high below, obviously 12,375, but is the high that we saw yesterday. But another lower high below that, I think, could start a little bit of a corrective move in the DAX. So just watch out for these little for a rally sort of petering out and possibly forming another sort of bear signal in the chart here. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.